What is up? I hope you're having an incredible day. If not, no worries. It's about to get better. Here's why. In today's video, I'm going to be teaching you a 1 hour chart trading strategy that is extremely simple, yet provides a ridiculous edge over the market, a ridiculous money-making advantage over a long period of time. And the very first step to you making money as a trader, becoming a professional, becoming profitable, is you having a strategy or a way of trading that gives you an advantage over the market. This is the same exact strategy that I use to enter the trade you see on the screen on the dollar Swiss that's currently up about 184 pips at a 2.9 to 1 reward to risk ratio. So by the end of this video, you're gonna know exactly how I place this trade and how I place trades every time I see patterns like this in order to give myself an advantage every time I place a trade on the 1 hour chart. I'm gonna go ahead and let the intro and disclaimer roll. While I do, click that like button for me. Go ahead and subscribe to the channel if you are new, and I'll be right back to teach you everything you need to know about this 1 hour chart trading strategy. See you in a second. Welcome back. So first off, I'm gonna be teaching you this strategy and every rule around it. After that, we're going to take a look at the live trade that you saw before the intro and disclaimer, and I'm going to break the whole trade down using the strategy that I'm teaching you. After that, we'll take a look at some bullish and bearish examples of the strategy to make sure you have a good handle on it. Then we'll take a look at the results of trading this exact strategy over the past year on the dollar Swiss. And after that, I'm going to give you a special added bonus and teach you a way to add some ridiculous accuracy to this exact trading strategy. So let's go ahead and dive in first with what do you need on your chart in order to trade this strategy? Well, you only need two things. One of those is an indicator, which is the RSI or relative strength index. This is going to help us spot reversals because this is a reversal strategy. The second thing you need is just your candlestick charts. It's almost purely based around price other than the RSI. So for those of you who like price action trading, you're gonna love this one. On our RSI, for the settings, I go to style and remove the RSI based MA. That's just not something that I use whatsoever. Inputs are gonna stay exactly the same. We're gonna be using a 14 period RSI indicator. And for those of you wondering, because I know I might get questions about this little MA settings down here is irrelevant unless you have this checked. So since we don't have it checked, it's completely irrelevant. Next up, what are you gonna need? Well, the strategy itself is gonna be based on two different patterns that we can find in price all over the place. Let me grab a trend line here and I'll show you what I'm talking about. So in a downtrend, what does this look like for those of you who are more experienced traders? Type it in the comments. What would that be? That would be an inverted head and shoulders pattern. Now, I know this is very normal. Don't click away from the video just because I said head and shoulders pattern. I promise it's going to get interesting in just a second. Now, this would be an inverted head and shoulders pattern. What would this be? I told you guys it was simple, but simple does not mean not profitable, as you'll see whenever we get to the results of this strategy. What is this? This is a double bottom, right? So double bottoms, inverted head and shoulder patterns. If you go out in markets and just randomly trade these everywhere, you're very likely not going to have a very accurate trading strategy. But if you have rules around them, trade them in a certain way with a certain reward to risk ratio, and you only trade these patterns during reversals, and you use the RSI indicator to help you spot those reversals, some really cool things can happen. And I'll show you again the results of the last year trading this on the dollar Swiss a little bit later in the video. But essentially what we're going to be looking for is the RSI to go oversold or overbought. When the RSI goes oversold, which means that the line on the RSI goes below 30, then we're going to start looking for price patterns, chart patterns like this. These are the only two that I use, and I use the inverted versions. So I also use regular head and shoulders and a double top, which we're going to go over very, very soon. But very soon, what the fuck? Very soon. But this essentially is what we're looking for. We want to see the RSI going to oversold, which tells us price is primed to have a reversal. After that, we want to see price create a double bottom or a head and shoulders pattern. And we'll go down to real charts. I'll break down the trade you saw before the intro and disclaimer, and we'll talk more about entries, stops, and targets. Let's go ahead and go down there now. So here we are on this trade, and outside of RSI just going oversold, there's one other way we can actually enter a trade, and that is if we have RSI divergence with our price pattern, with our chart pattern. with that being the case, this actually adds accuracy to the trade. If you can see RSI divergence in the midst of a head and shoulders pattern, that is a very accurate trading opportunity, at least according to my own testing and trading. So with that being the case, let's go ahead and break down this whole trade. So what we're looking at here is price heading lower. How do we know that price is primed for a reversal? Well, we start to get into the oversold territory under 30 on the RSI indicator. So at that point, we know price is primed for a reversal. And a lot of times people will just go, oh, the RSI is oversold, I need to buy. No, we need more confirmation than that in order to create an accurate strategy that gives us a massive edge over a long period of time. So what we need to see after oversold is something like a head and shoulders pattern, or inverted head and shoulders, since this one is a bullish pattern. So then we have this first shoulder created right here, coming down to the head of the pattern, up, down to the second shoulder. So for me, what I want to see, just to give you the rules so it's more set in stone, more objective, is after price creates the head, because right here is where I start looking for head and shoulder patterns. And I know that that seems odd. Like, how do you know there's going to be a head and shoulders pattern? You don't, but you start preparing yourself. And what I like to do is at this point, if we get a pullback that comes anywhere in this area, let's say, so anywhere from here up to here, down to here, wherever it may be. And then we get a pullback that comes into this area, anywhere from here all the way down to the head of the pattern. If we get into this area, then I'm classifying this as the right shoulder of the pattern. That just keeps it a little bit more objective for me in terms of spotting head and shoulder patterns. So with that being the case, after we get into this area between our left shoulder and the head of the pattern, that's when I start looking for buying pressure. Buying pressure for me consists of just a few things, like candlestick patterns, like 2 or more green candles in a bullish trade, like a big close above candle. Buying pressure is pretty simple. It just means whenever you see green candles start coming into play, then that is buying pressure. Let's push the market forward here. As we push up and back down, what does that look like? That looks like buying pressure, right? If we keep going forward, you can see even more buying pressure come in. The exact place I decided to enter was after this candle, because at this point we've seen a lot of buying pressure. I think it was this candle. It may have been the one before it. May have been this one. We'll see whenever we hit play. But either way, that's a lot of buying pressure coming into the market. So with all that buying pressure coming into the market, I decided to go ahead and place an entry here based on the exact strategy you're learning. We have price coming into the oversold area. We have divergence along with a head and shoulders pattern. Again, one of the most accurate ways you can trade this pattern is with RSI divergence happening while the head and shoulders pattern, inverted head and shoulders, please don't get on me in the comments for that. But while the inverted head and shoulders pattern is forming, if you see RSI divergence, again, super accurate. So as price comes up, we create the second shoulder. We see some buying pressure coming into the picture right in this area. Place the trade. For me, and for what you're learning in this video, and this is what I did on this specific trade, and for all the testing and trading results you're going to see throughout the video, I do a 15 pip stop loss under the head of the pattern or under the lowest low of the double bottom. We'll talk about bearish trades in just a second. Let's stick to bullish to keep things from getting confusing. So at this point, 48 or so, 48 or 49 plus 15 would be 63 pips. So here we are at 63. And as you'll see, whenever I click play, I actually ended up getting a pretty massive reward to risk ratio on this. I say massive, about a 2.9 so far, but let's go ahead and click play and look at how this trade played out so far. So while editing the video, I realized that I did a really poor job of explaining RSI divergence. So I want to do that for any of you who are new and don't understand what that means before we take a look at the trading results. So RSI divergence is really simple. It just means price is creating lower lows on price, right? And that the RSI indicator itself is creating higher lows. That is bullish divergence. We'll take a look at bearish divergence as well in just a moment, but just realize that that's what RSI divergence is. And also for my targets, the way that you're going to see them being taken throughout the video is at a 1.4 to 1 reward to risk ratio based on the stop loss I just taught you. But as you'll see in a second, for this specific trade, I actually got multiple targets and ended up with a much higher than 1.4 to 1 reward to risk ratio. As you can see, we've been in this trade for a while now, but we have now pushed up to over a 2.8 to 1 reward to risk ratio and about 178 pips here on this trade. Just simply using the RSI to help us spot when a market's primed for reversals and chart patterns. I know it sounds super simple, and it is super simple, But as you'll see a little later in the video, this is something that has provided a great edge in the market over the long term. So let's go ahead and take a look at what's happening now so I can show you a bearish version of this. What's happening right now on the dollar Swiss? And by the way, this happening right now, if we get a big-ish red candle that shows a little more selling pressure than this, I'm exiting this trade and probably switching my position from long to short. Why would I do that? Well, we have this same exact situation that we had below in the opposite direction now. We have price coming up and pushing above 70 on the RSI. So for a sell trade, when we're going short, we want to see the RSI above 70 to indicate markets are primed for a possible reversal. Right now, we're above 70 or have been. So since we're above 70, and do we have RSI divergence with our head and shoulders pattern? Yes, we do. Does this look like a head and shoulders pattern? Sorry, I didn't point that out earlier. This is, in fact, a head and shoulders pattern already. I'm just waiting for selling pressure. We have our first shoulder here. We have the neckline. We have the head of the pattern. We have our second shoulder coming up here. And now, again, I'm just waiting on a bigger red candle. A close below candle would be great. At that point, I'm exiting this trade and going short on the dollar Swiss because of the same exact strategy I used in order to go long. So using it in two different directions here and breaking it down one more time. The reason is we have a head and shoulders pattern here. Does it happen with RSI divergence or at least after RSI was overbought? Yes, it does. So super simple here. And I know I said I was waiting until the end to show you this bonus, but actually this is all happening inside of a major level of structure on the daily chart. So on the daily chart, we have this major area that I was not actually paying attention to as resistance, but since we're up in this area and we're getting this head and shoulders pattern with our RSI being overbought, this little level of structure does in fact add confirmation to all of that being a possible place that price could reverse. So all of those things coming together to equal a valid bearish version of the strategy you're learning right now. Let's go ahead and take a look at a couple of examples of using double bottoms and double tops with this same exact strategy. So first, we'll take a look at a double bottom trade using this strategy. Go ahead and try to break the trade down yourself as I'm doing it as well. So at this point, what would we be looking for to know that the market is primed for a reversal? We've already talked about it. That would be the RSI indicator going below what? Going below 30. So here we have that 30 line. Is the RSI indicator going below that 30 line? Yes, it is. And we don't have to have this, but is it creating divergence? Well, we have lower lows on price, higher lows on the indicator, so we know we're primed for a reversal even more. This is giving us even more confirmation that price is likely to push back up. Okay? With that being the case, starting from where we are, do we have a trade right now? No, we don't have any kind of trade right now, but in terms of looking for a double bottom, let me break that down with you. This is what I'm looking for a double bottom. I want to see my first bottom created. I want to see price start to push back up. After price starts to push back up, I'm going to create a zone. My zone is going to be between the bottoms and the lows of the first bottom. At this point, I want to see price coming into that area, and what I do not want to see is a candle close below that low that we first created, because that means trend continuation to the downside is likely. I'm not trying to buy when it's likely market's going to continue lower, right? So with that being the case, what I do want to see or can see is a body of a candle close inside of that zone, or nobody touch that zone. That sounded weird, like nobody, or no body of a candle touch that zone, but a wick can come into that zone, and that would be a valid double bottom as well. So there's just the rules that I use for a double bottom. Let's see what happens here. Price is going lower, lower, lower. We do not have buying pressure, but do we have a valid double bottom at this point? Yeah, here we have a valid double bottom after the RSIs went oversold and after we see RSI divergence. So all things are coming together to give us a lot of confluence for a possible reversal. Now, I would personally be waiting on buying pressure. There's a green candle. I wouldn't call that enough buying pressure yet. That I would call buying pressure. We have two green candles coming out of this area. This one looks to close above the previous candle. Buyers look to be taking control here at the second bottom. When you include that with the RSI divergence and coming out of oversold, it gives me all the confirmation I need to be comfortable placing a trade. We set up the stop loss, or at least I do, in the same way I taught you earlier. We're going 15 pips below the lowest low of the double bottom, which is going to be right around 28 pips in this case. And for our target, as I said before, throughout all the examples here, we're going to go with a 1.4 to 1 reward to risk ratio. So here we are, entered into the trade based on the strategy you're learning. Price pushes up and eventually does in fact hit that target. Now, there are other ways you could enter this. Feel free to make the strategy your own. You could enter on the break of the neckline to add accuracy, but you're also going to have a much harder time getting a larger reward to risk ratio. So let's go ahead and take a look at a double top now, and I'll break down a double top as well using this strategy. And these things happen everywhere, guys. Like, see if you can spot it on your chart right now. There's actually a trade on the chart where we're right at where we just were with the double bottom we took a look at. Where is this exact strategy happening on the chart right now? Hopefully you were able to point it out right here. This is the double top version of the strategy. I'll break that down in a second, but let's look left. Okay, so starting from down here, right? We start down here, we push up higher. When's the first time we go overbought? Right here. Do we have a valid double top here? Hopefully you said no, based on the rules that I use for a double top. Here's what I would need to see. I would need to see a candle that at least touches, but does not close above this area. Does that happen? No, we get closes above that area. Normally this means we're going to see the uptrend continue. In this case, we did see that uptrend continue. So this would not be our trade. What would we be waiting on after that? I don't know if you guys have ever tried to say, what would we, a bunch of times, but I'd say it a lot in videos and it almost always gets me. I almost always stumble over that. But after this, we would be looking for price to come back up into the overbought area above 70 on the RSI. Does that happen? Yes, it does. We get up into the overbought area on the RSI. As we do, price creates one top, the neckline of the double top, the second top, and I would consider this big red candle selling pressure. Therefore, I would enter the trade based on that selling pressure with my 15 pip above the high stop loss, which will be 40 pips on this specific trade, and with that 1.4 to 1 reward to risk ratio. As you can see, price easily goes down to hit that target on this specific example. Of course, that won't always happen. And now that we've actually taken a look at some examples, I want to go ahead and break down the full year on the dollar Swiss using this exact strategy, show you some of the wins, some of the losses, the win rate, and the overall ROI. Before we do though, I want to show you an example of this in crypto, because this is a strategy that I use not only for Forex, but also in some of my shorter term crypto day and swing trades. So let's break this down here on the chart of Bitcoin. What do we have happening right now in Bitcoin? We just saw price coming to an oversold area, which means the RSI went below 30, telling us what? That Bitcoin is primed for at least a little bit of a reversal depending on what happens. Again, if you just buy every time markets go oversold, you're going to lose money. So with this being the case, what are we waiting on? Well, at this point, I would be waiting on that double bottom. And what I would do is go ahead and put my box on here between the bodies and the lows of our first bottom. With that being the case, we can hit play. And you can see that price comes into that area and then does what? Creates buying pressure, showing me that this support level is holding as our double bottom after RSI going oversold. So we have a market that's primed for a reversal here on Bitcoin. We then have buying pressure after our second bottom, which gives me everything I need to enter the trade. For cryptocurrency, I just go one ATR below the bottom. So at this point, the entry candle would be here, which is about $400. So the ATR of this candle is about 400. And the way I'm getting that is looking right up here at my ATR indicator. I have a full video on the ATR. You can find it up here somewhere, or just type in ATR. I think I'm one of the first people that pop up with that video. But let's go 400 below 510. So we're going to go $910 for our stop loss, something like that. We'll go 920. Not a big deal for this example, and a 1.4 to 1 reward to risk ratio as we've been doing. And actually, I changed this up. In cryptocurrency, I set a minimum of a 2 to 1 reward to risk ratio when trading the strategy. So let's see if this specific trade works out. And here you can see we do in fact push up and actually hit that target at a 2 to 1 reward to risk ratio. Now let's go take a look at the results of the dollar Swiss from a full year of trading this exact strategy. On the screen, you can see the results from the past year. This is from April of 2021 to now, April in 2022. The results are as follows. Using exactly what I've taught you, stop loss of 15 pips below or above the pattern with a 1.4 to 1 reward to risk ratio. We produced 35 wins, 15 losses for a 70% win rate and 28 R, which just means 28 times your risk. If you're risking 1%, that means it would have made 28%. Risking 2% means you would have made 56%, so on and so forth. But with that being the case, you can see that using very simple chart patterns, by simply using them when the RSI indicator is either going through divergence or coming out of oversold or overbought, produces an edge. So if it's this simple to produce an edge, to produce a money-making strategy, then the question you may be asking is, why is it that so many traders fail or have such a hard time becoming profitable after years and years of trying? And I think the best way for me to explain that is with an example. So let me help you out with that question, if it's something that you were asking yourself, with an example that we're looking at here, right? This is that head and shoulders pattern we were looking at. The RSI is overbought. So let me explain this. If this was happening at a level of structure, let's say it was the absolute perfect trade. This level of structure has been tested 100 times by price. Let's say it was an even handle number. Let's say the RSI, instead of being at 80, was at like 99, almost 100. So it's got to fall, right? Let's say we get the perfect head and shoulders pattern, a lot of selling pressure afterwards. What most traders tend to do is bet and trade based on that one trade, and whether they're risking way too much on it or just believe in that one trade because of all the different confluence that's coming together. The fact of the matter is, the outcome of that one trade, no matter how perfect it seems, is completely random. I'll say that again. The outcome of one trade, no matter how much confluence is coming together, is completely random. In trading, we are trading based on statistics. And yes, the more confluence we can put together, the higher our statistic advantage goes over a large sample size of trades. But the outcome of a single trade is completely irrelevant over a large sample size. So what most traders tend to do is they have that mindset of, if I have enough confluence coming together, that means that I should go short here. Head and shoulders pattern, super highly tested level of structure, even handle number, a lot of selling pressure after head and shoulders pattern. I'm going short, I'm risking my entire account, or I'm going short and this has to win. And then what happens? The trade loses and they go, oh, screw this doesn't work. Obviously, Steven was lying because it didn't win this one time. But I'm telling you now, one specific example has no bearing on the way a strategy will perform over time. Let me give you an example of the right way to go about it. If you do that perfect scenario one time, the results are random. But if you do that perfect scenario I just discussed over the course of 100 trades, you're going to be right a lot more than you're wrong. And you're going to be right with a higher than one-to-one reward to risk, hopefully. So what we have to do as traders, and something that I really want to get across to any of you that are new or have been struggling for a while and didn't understand this, is that the outcome of one trade, no matter how much confluence is coming together, is irrelevant and random. But the outcome and the statistics of our strategy comes out and plays out over a large sample size of, let's say, 100 trades. And now, with that in mind, comment this below. How many of you who are new or still struggling in your trading have ever traded the same exact strategy in the same exact way on the same exact pair 100 times? I imagine the answer is very few. I guess I'll see whenever you guys comment below. But most traders don't do that. Here's what most traders do. Let's go ahead and take a look back through a few of these trades. Let's find an area where there was a few losses. So this just will be a very good example. Let's say you start trading right here. This is what most traders do, and I'm sure you may have been caught in this. I'm not blaming you, and it's not your fault. I did this at the beginning of my career too, but I learned from it, and now I want to teach you the mistakes I made to help you avoid them. So what will happen is a trader will start trading right here. Their first trade will lose. See the red line? Red lines are losers. Green lines are winners, by the way. Their trade will lose. They'll be like, shit, does this even work? Their trade will lose again. They're about to give up. They'll win one. Oh yeah, okay, no, it does work. It does work. They'll win another one. This definitely works. Awesome. I'm going to win the rest of my trades for the rest of the year. They'll lose another one and they'll be slightly below break even after 5 trades, which in this case was about a month of trading, and they'll just give up on that specific strategy. And what you end up with, if you give up right here, is probably somewhere around a negative, depending on your risk, let's just say a negative 3% return, right? So you end up with a negative 3% return because you decided to completely give up on trading. Well, what do you miss out on when that happens? You miss out on a series of winners that could have pushed you well above break even and into profitable trading. But because you decided to quit after 5 trades, after a month of trading a strategy and it just being break even or barely losing, you ended up missing out on the bigger picture, because the bigger picture is that this strategy does in fact provide a higher than 1-to-1 reward to risk ratio, along with a bigger than 50% win rate, which equals profitable trading if you can stay consistent and disciplined enough to the strategy to let that edge play out. So one of the biggest reasons that I see traders not becoming profitable or struggling for years, or beginners just giving up, is that they don't give the strategy that does have an advantage enough time for that advantage to play out. So that is going to be one of the big lessons from today's video. Hope you take that and actually learn from it. When you're trading, I know it's really easy to focus on that one trade that lost or that one trade that won, but overall, in the grand scheme of things, one single trade or a group of 5 trades throughout your entire year of trading is going to be nearly irrelevant. So keep that in mind moving forward. Hope you guys enjoyed this content. If you did, make sure to comment below. Let me know you made it to the end. Make sure you click that like button. Make sure to subscribe if you are new. And also, if you would like some more advanced training, then we do have some space available in the TTC Forex University, which is our flagship program now. So if you want to get involved with that, the link's in the description, or you can go to www.ttcfxuniversity.com. It'd be a pleasure to have you aboard. The university comes with a full training course that teaches you all the strategies I'm currently using, along with a lot of techniques I've learned over the past decade of my own trading career, according to risk management and trading psychology. So if those are some of the things that you're struggling with, and if you'd like my analysis each and every week across the entire Forex market, then we'd love to have you aboard in the university, again, in the description, or you can go to the link that is currently on the screen. If not, that's not a big deal at all. No worries whatsoever. I'm still going to keep providing you with great content here on YouTube, but make sure you are subscribed so you stay up to date with that content. And I'll see you guys in the next video. Talk soon.